What's up, guys? Clint Coons here. And in this video, I'm going to show you some different ways in which you can acquire real estate with a IRA. All right, let's get started. Okay, so here's the deal. If it comes to residential real estate or commercial real estate or raw land, for whatever it is, if you want to invest in real estate through an IRA, first thing you need to do is set up a self-directed IRA. Traditional IRAs that you have with your bank or your broker will not allow you to invest outside of their platforms. Typically, they're going to keep you in equities. So, if you want to be engaging in real estate transactions, if you want to do hard money loans, you want to invest in syndications, it requires that you take your existing IRA and you roll it over into a self directed IRA. So, the idea here is that when you want to invest in with your IRA money, what you need to do is you take your existing IRA and you set up a self-directed IRA with a self-directed IRA custodian, and then you roll your funds into your new self-directed IRA. So you got to get them all put inside of that new account, because with the self-directed IRA, your custodian is going to give you the ability to invest with those funds into anything you want, provided it's not a prohibited transaction. So they will kind of keep some bumpers there to ensure that you don't screw it up if you're working with a quality custodian. Now, once you have your funds inside of your self-directed IRA, the next thing is, how do I deploy these into real estate? Well, there's a couple different ways in which you can do this. Number one, quite simple. You could actually go out and buy a property directly in your IRA. So your self-directed IRA would take title directly to this real estate, meaning that the property now would be held in the IRA's name. Typically, it's titled name of the custodian, FBO, meaning for the benefit of your name, self-directed Roth IRA, or something of that nature would go on title. So if I bought the property from someone, then when they deed the property, they're going to deed it into my self-directed IRA in the manner in which I just described. Now, using this technique is obviously very simple for you, meaning it's really easy. Find the deal, talk to your custodian, they'll help set up the deal because you can't sign on the documents. You need your custodian to do that for you, and your custodian will then wire the funds for closing. But the problem with that and the fact that it's easy is that you have no asset protection. So if someone's injured on the property, let's say I have this tenant right here and he's injured, what they're going to do is they're going to sue the owner of the property. And the owner of the property happens to be your IRA. So when they sue this IRA, you've got the house inside of there. Maybe you have more cash that you haven't yet invested yet. All of those assets are at risk. Additionally, the IRA itself does not provide asset protection. Technically, they could do this. They could sue the IRA, and if they took all the assets and they were still looking for money, they could come after you as the individual account holder. So you got to be careful there when you're buying what we refer to as dangerous assets with a self-directed IRA. You don't want to be holding them directly in the IRA name. So what are our options? We have a couple different options when you're investing with a self-directed IRA, and it really depends on where you're buying the property. So one common option when it comes to using a self-directed IRA is to set up a limited liability company. So you would set up an LLC right here to actually take title to the property. Now, this LLC is owned 100% by your self-directed IRA. So 100% of that is the sole member would list your self-directed IRA there. Now, the way this deal typically comes together is that you create the LLC, you'll want to get a bank account set up in the name of the LLC, and you'll move the money from the IRA custodian account into your LLC bank account. Now, you're the manager of this LLC, so you can go out there then and put these deals together. So you'll take title in the name of that limited liability company, and you can actually now sign on the docs because it's the LLC entering into the transaction and not the IRA. So it gives you greater latitude. But that LLC must be owned by the IRA. Now, if you're going to go down this road and you want to create a limited liability company, do not make the mistake that I've seen people make time and time again, where they think they can take an existing LLC that they already own. Let's say you set up this LLC 2 years ago, and you're the member of this LLC. And quite frankly, you're being too cheap. You're thinking, I don't want to spend any money with an attorney to create an LLC the proper way for my IRA. I'm just going to move this LLC into my self-directed IRA and start investing. That will get your IRA disqualified. You cannot do that. When you employ this strategy right here, you must create a new limited liability company. And when you set up that LLC, all the costs for the setup need to come from the IRA. So again, this is one of those situations where you're not going to whip out your credit card and hire an attorney to set up this LLC. You want to make sure that the IRA is the one paying the attorney's fees to create the LLC. And the last thing I want to leave you on this is that when you set up this limited liability company, it's not like the operating agreement you have for this LLC over here that you created in your own name. This limited liability company that you're setting up here will have very specific provisions in it to ensure that it can be owned by an IRA, so it does not violate any of the provisions under the Internal Revenue Code that could risk disqualification of your IRA. And you don't want to go down that road, because if it does get disqualified, you can get hit with a ton of taxes, which would basically obliterate a lifetime of savings into this retirement account. Okay, so that's one option when it comes to investing in real estate with your IRA. Second option you have is if you're investing in a state such as Florida, you may want to consider setting up a land trust. So land trusts work as well. You can use a land trust where the beneficiary, the 100% beneficiary, is your IRA. So you'd set it up, self-directed IRA is 100% beneficiary. I would be the trustee, or if I'm looking for some anonymity, as you'll notice in a lot of my land trust videos, I recommend you set up a Wyoming LLC as your trustee for your land trust. So this would be a perfect example of how I might set a deal up, let's say in Florida. Because in Florida, the land trusts provide asset protection. So the properties that are held inside of there, again, if anything were to go wrong, then this takes the hit and not my IRA. So my cash stays protected from potential claims. Now, let's say you want to buy multiple properties in your IRA. Okay, no problem. So if you have a lot of money inside of there and you want to make multiple investments, then you can set up either multiple land trusts or multiple limited liability companies, and each of them would be owned by this IRA, and you would put the properties in your separate LLCs. So it's really similar to how we invest in our own name. We use limited liability companies. We're the members of those, or more importantly, what I like to refer to is you have a Wyoming holding company as the member, which you could use that exact same strategy here. So if you're investing with your self-directed IRA and you want a level of anonymity, that is, you don't want the tenants to know that the LLC that owns the property is actually your self-directed IRA, because as I told you, that's what's going to go on title. Then what we should do is create a Wyoming LLC right here as a buffer. So now the Wyoming LLC is owned by the IRA, and then all these red boxes are owned by the Wyoming Limited Liability Company. Hey, there's lots of ways to put this together. If you're considering investing with your IRA, key point is you got to get it into a self-directed IRA. And then the second thing is, don't make the mistake that I've seen investors make time and time again, where they buy property directly in the name of their self-directed IRA. You're just setting yourself up for a potential downfall if a lawsuit develops. I've seen it happen before. IRA investors hold 14, 20 some properties in their self-directed IRA, and it only takes one lawsuit to wipe out a lifetimes of effort putting that money aside. Great way to invest, but do it responsibly. Hey, if you liked the video, be sure to hit the like button. And if you're not yet a subscriber, smash that button now so you get updates every time I create new content about asset protection and tax planning for real estate investors.